When I first started trading, I was only trading technicals because that's just what I was introduced to and it was what I was taught. I started learning by something called Elliott waves and just using technical analysis. And when I was being taught this, it seemed great because I'm being shown this after the fact. You know, like after something's already played out on the charts where you're doing back testing, everything looks awesome. When I actually started trying to implement this stuff and when I started trying to use this in the real life markets, I did nothing but struggle for months. And it was interesting because every time I looked back at the charts, I could see something where I was like, oh, this is where I went wrong. There was a candle break there, or there was something that happened here, or there was a chart pattern that formed that I didn't see. And it was always after the fact that I can see this when the trade looked good, but to do it in real time while it's happening, it was 50-50. There were times where it would work. There were times where it wouldn't work. So once I started to struggle with that, I went to YouTube and then I would start searching new technical analysis strategy. And then I would find something called an RSI indicator. And then it's like, okay, well, now you start to learn something called overbought and oversold conditions. And now, once again, when you're looking at this on a chart, it makes sense. When you're back testing it, you can see exactly where the entry is. But to apply it in real life, in the markets, was probably less than a 50% probability that you were actually going to win your trades. So this just kind of spiraled into a roller coaster of just finding a new strategy, testing it, finding a new strategy, testing it. And none of them really worked, not consistently at least. It's almost like a fish getting a bite of a worm, like just a taste, because you'll win one trade and that strategy will work. But then the consistency is the biggest problem. So it's like using this entry or using this strategy will work once, but is it going to work every time enough to end every month or every week profitable? That's the struggle that you have. That's the struggle that I had when I was only chasing all these strategies just using technical analysis. When I started implementing all the things that actually makes the markets move, this is what helped me become profitable. This is what helped me go from living in a regular apartment to the penthouse that I wanted to live in. This is what helped me go from driving just a regular car you see in the streets to a $200,000+ car that I paid for cash. This isn't to brag or to say anything like that. This is just to show you like this stuff matters and it can change your life. So if you take this seriously, you can go from that struggling, jumping through strategy type trader to someone who understands the markets and learns when to profit from them at the right time. That thing that I learned is called fundamental analysis. And it's basically, I break it down into three different things. We have monetary policy, which are central bank policies. These are things like interest rates. And then you have economic data. These are things like inflation data. And then geopolitical events. This is fundamental analysis, and this is the thing that I had learned that actually helped me understand what drives the markets. When you combine this with something called sentiment analysis, which is just understanding the emotions of the markets, and I know that might sound weird, but remember, the markets are made up of humans. Regardless of there being algorithms or bots or high-frequency trading, humans have emotions, and humans created all of these bots, right? So fear and optimism still exists. Now, when you combine fundamental analysis, sentiment analysis with your technical analysis, this is when you can find the right entry at the right price with the right risk reward, and that's how you stay in the game for the long term. So how do you apply this in real life? Well, I'm going to show you an example on gold. When unemployment data was released, the plan that I had going into this, whether the data came out higher or whether the data came out lower. So my expectations before this data was released, as you can see here, I was looking at jobless claims and I'm watching gold, so that's where I'm going to focus on. If this data came out higher than expected, we can see here that this little red matches the red here. I would be looking for gold to go up, right? I'd be looking for gold buys. Now, if this data came out lower than expected, you can see this little green box matches with this little inflationary box. I would be looking for gold to sell or to drop, right? Because lower jobless claims, if this was to come out lower, that would be inflationary for the markets. If it came out higher, which you can see here, it would be deflationary for the markets. So let's take a look at the data, how it came out, and then what happened to gold when the data was actually released. If we take a look at this little economic calendar here for my news terminal, we can see that the Reuters poll, or this is also called the forecast, the market's expectation was 260,000, and then the actual was 241,000. This means if you look at this next box, it came out negative 19,000, right? So it came out below expected. Now, if you go back to my little cheat sheet that I had, if this comes out lower, you can see the direction that I'd be looking for gold right here would be gold sells. So the data was released at 8:30, which you can see right here. 8:30 on the calendar, and then 8:30 right down here below. So if we play this out in gold and see how the data reacted or how gold reacted when the data was released, we can see we got an immediate drop on gold and it reacted to the support area. If we take a look, thankfully, this was actually a slow enough move when it happened. My entry was here and my take profit was there. The reason this was a short-term sell for me is because I wasn't expecting this to change the long-term bias on gold because this data wasn't strong enough to cause any continuations lower. It hit this support here and it started to reject it right there. So this was the area at this support that I was taking my profit already on gold, and I was looking to get into another trade because my bias on gold is still looking for upside. Now, the reason I wasn't expecting gold to drop any lower from here, I had taken profit here and I was already looking for a reversal, has to do with something called interest rates, right? We talked about monetary policy before. So now I'll show you another little tab for my news terminal right here. Let's move the calendar off for now. If we take a look at market expectations for interest rates, we can see here the Federal Reserve, this is what impacts gold. We are currently 90% priced in, that's what this 89 is, for a 0.25% cut. But we're 10% priced in for no change, which is also called a pause for interest rates. Both of these are bullish for gold, meaning I'm still looking for buys as long as these two things are intact. So the data, even though I was expecting a short-term move to the downside, because it's not changing market expectations for interest rates, I'm still looking for buys on gold. So once it hits the support area, this is when I start using technical analysis, right? The fundamentals gives me my bias. The fundamentals tells me what I want to look for, but the technicals is when I line up with support and then I look for price action to shift here, and then I can mark off the next area, technical analysis, as either my take profit or I just mark up this area up here. The fundamentals are telling me that gold should still be bullish because the probabilities for interest rates haven't changed, and this is still supportive for gold. So I'm still looking for gold buys. And then as we play this out, what happened to gold? You can see here that we immediately held this support and gold ended up playing out. If we take a look, before I go too far on this, my entry was right here, just taking gold buys right at that support, right back up to the next zone. So when you take a look at the short-term move, understanding that the data isn't going to give us something called, a swing trade or an intraday trade, meaning a longer-term trade or a longer move to the downside, this is how understanding data like jobless claims can help you profit and take trades on things like gold. Now, I'm sure some of you are saying yeah, this is easy to explain after it's already happened. Kind of like what I was saying in the beginning of this whole video. Everyone wants to backtest TradingView and talk about trades that happened and why it happened. But this isn't me making this up. I'm not randomly looking for moving averages, breaks, or technical analysis without backing it up with reasons. You can go backtest this anywhere by just Googling the information. You can go check that this data came out at 8:30. You can go check that the markets reacted specifically at 8:30. You can go see what interest rate probabilities changed to after the data came out. And if you really want to, you can go do a quick Google search on how interest rates impact gold. Are they positive or negative for it? All of this information is out there. The difficult part is actually applying it to the charts in real time. It's really hard to argue this stuff when you have the data right in front of you. This is what I teach every day inside my private group with my members when I trade live with them. For example, today, if we take a look over, you can see here, Jay, you can see he even said here, crazy one, 0% drawdown. So if I zoom in on this, you can see the gold trade that he took right here. If I scroll down a little bit, we can see once again, today, after the data came out, you can see the time right here, another trade that he had taken following the same analysis. I can scroll down for a while on this. We have Sultan, another gold entry right here. He made $2,000 following that trade. This is just this morning. Here's a trade from Cortez. Once again on gold, you can see exactly where his entry is, which is where I was telling everyone that I took it. And you can see where his take profit is, which looking back, this obviously ended up working out. And here's Michelle also following the same trade. Gold, exact same entry that I took that I just showed you. Here, take profit, still in the trade. This is Justin inside the private group, also following the same trade. You can see he just said he grew his account by plus 3% in this one trade alone. And this is not me just sending signals in the group. This is us analyzing the markets together, anticipating the moves, because once you understand how the markets move, you'll understand when to enter the trade and when to exit.